Okay, so it's the recap of today, of Friday, the last day of the month and the last day of the week. Um, so this is the candle that started today, and what I'd like to point out is this wick right here. And if we go down to the lower time frames, then we can see how price reacts to this level. So if I just only show the mean threshold of the consequent encroachment, look how price is reacting to that area. It's very sensitive. The bodies are respecting it, the wick is respecting it, then it trades above, then look, the bodies are just closing just below it, then up and down, price stays below it, and here price is still wandering around this level. And so why is this important? Well, if we go back to the 4 hour, we can see that we had right here, we had buy side delivery, and this was the sell side delivery. Notice that from this point between, actually this is sell side delivery, so from this to, let's say this, or the bodies to this, here was only sell side delivery, of buy side delivery, sorry. So therefore we had speed right here, because this offered the sell side liquidity. So now all this right here is now being delivered efficiently. So this makes this a breakaway gap. You don't expect price to come back in here, fill this inefficiency, and then go lower. No, you expect this to be a balanced price range. And that's exactly what happened. So with this in mind, you might expect today a little pullback into this low right here somewhere, and then price will go lower, find some inefficiencies or other liquidity. So going down to the, let's go straight to the 3-minute time frame. So here we are on a 3-minute time frame. So let's analyze what happened today. So Asia made a move, a bearish move, put in the low, then created a failure swing, traded up again. There was some consolidation going on right here, but there, and just before London there were some signs that price wanted to go higher, and price was not the intent of taking out this low or this low. How so? What were the signs? Well, first off, I always like to measure the wicks. I like to measure the rather bigger one. I like them in quadrants, and if we can see right here, you can see price exactly traded to the 75% level of this wick, which means, and then price trades away. So there was no intent of taking out this low. No, it was intent to just test the wick and then go. Later on, price came back and respected the 25% of the wick and then just go. So price has no intent of going lower. Second, look at this order block. This was an order block right here. Price touched the 75%, traded higher, and here, if you take this high, you can see we had a close above this wick, so there's a break in market structure, so makes this a strong order block. This order block also took minor liquidity here, excuse me, and then price traded back into the order block a couple of times, and especially in this area right here, look where the bodies are closing. They are all closing above the mean threshold of this order block. And also notice this candle. Why? Look what it has doing, what has been done. It took out all these lows, these lows, and all that low. It took that low, and then what happened was a CSD. Right here is your CSD. Then what happened? Well, okay, let's mark out this order block then, this propulsion block, to be more accurate. Then what happened? Price traded back into it with two consecutive down close candles, respecting the mean threshold of this propulsion block, and then shoots away, and also creating your second stage of delivery. Cool. So this will be perfectly fit for a long. Okay, but where would you go long into? Well, Asia high. Okay. What are the other targets that we could see? This was already been a nice 1 to 2. Well, if we go down to the 15, at this moment in time, what I noticed was that there were some equal highs over here. So you could also target those equal highs right there. And that would give you a nice 1 to 4. So that would be a good trade. A long trade because you had to sit out the whole day, but okay, something you could do. So that is what happened. Just let London start. Then price traded higher, as we expected. Price created a 3 drive right here. With that 3 drive, it took out Asia high, like here. Also here with the second drive, it created equal highs. Took them out, distributed here a bit, and then traded lower. Was this a genuine break in market structure? No, because if we measure the move from here or from here, for me, doesn't really matter. And we say, okay, make this a dealing range. We see that these lows are just in premium and just liquidity lows, internal liquidity. And also this low is internal liquidity. And then price reacted to this order block, and maybe on the more higher time frames, I am not sure, not here. But yes, here we are. Here we can see there was this 1 hour, and let's extend this one. There was this 1 hour fair value gap. So let's go back to the low time frames. And here you can see price traded back into, also if you use it like this or this, doesn't matter. This is the premium, and it respected the 50% level of this fair value gap. Then we are at lunch at this moment. Price traded higher, and price came back to the fair value gap. Yes, this was a sharp move up and also a sharp move down, but mark out the order block. Gonna remove this 1 hour fair value gap, but look, this is the order block of the 3 minute. Okay. So, and pay attention to the bodies. They are closing exactly at the mean threshold of this order block. Here it touches the mean threshold, trades up a little bit, came back. Now the bodies are respecting the mean threshold of this order block, and then price trades higher again. So in case you missed this first entry right here, and your rules allow it, you might say first change in the state of delivery, second stage change in the state of delivery, and you go long from one of those candles. You might say even this one right here to there. Well, you could target these highs right here. It give you maybe this high, almost on 1 to 2. And again, if you wanted to target those equal highs over there, like something like this, it gives you a 1 to 3. Something like this, but you had to sit out all the New York session, and right before the afternoon started, your TP would be filled. And this was actually a trade that I took using this exact same logic that I explained here. So this was a risky trade because you're trading against the grain and trading the retracement. But then look what happens on the 1 hour, I guess. Because on the 1 hour we have this, after the big move, this is the first order block. And if we draw this order block out, this is a 1 hour order block. No, that's the wrong one, I'm sorry. Anyway, this is a 1 hour order block and look where the bodies are closing. They're closing at the first 25% of this order block. And the wicks, they do the damage. They took out these equal highs right here. And they close them back below. And then this lighter area at 10 o'clock is where London afternoons from the close starts. And then price just melts. So Asia, London, lunch, New York was all building liquidity, and then it took out at the end of the day. And also if you look at the more bigger picture, I noticed a 3 drive earlier. 1, 2, 3. We have a reversal set up right here. Look what this is. Right here we break a low here. And we took the highs, we took the lows, so that makes this dealing range high, dealing range low. Price trades back to it, consolidates a bit, and then trades down. And here you can see it more obvious. This is a breakaway gap. Price never touches it right here. Then we have another fair value gap. Price respects the consequent encouragement, closes below the fair value gap, trades back into it one more time, and then it just takes off. It goes lower. So I hope you find this insightful, and thanks for listening. Bye.